In 1992, one man made over $1 billion in a single day. He didn't invent a product. He didn't build a company. And he didn't win the lottery. Instead, he placed a bet against an entire country. That country was the United Kingdom. And the man behind the trade was billionaire investor George Soros. What happened next would shake global financial markets and earn Soros a legendary nickname: the man who broke the Bank of England. To understand this story, we need to go back to the early 1990s. Europe was trying to create a new financial system. Several countries agreed to link their currencies together in a system called the European Exchange Rate Mechanism, also known as the ERM. The idea seemed simple. If European currencies stayed close in value, trade between countries would become easier. And eventually, this system could lead to a single European currency. But there was a problem. Not all European economies were equal. Germany had a strong economy. Its industries were booming and its currency was extremely stable. But the United Kingdom was in a very different situation. Britain was dealing with inflation, economic slowdown, and rising unemployment. Despite these weaknesses, the British government made a promise. They promised to keep the British pound fixed within a narrow range against other European currencies. Maintaining that promise required enormous financial intervention. The government had to constantly defend the pound whenever investors started selling it. And financial markets were watching closely. Among those watching was hedge fund manager George Soros. Soros ran a powerful investment fund called the Quantum Fund. His strategy was simple: find economic situations where markets were being artificially controlled and bet against them. When Soros studied the British economy, he noticed something dangerous. The British pound was overvalued. In simple terms, it was worth more than the economy justified. To maintain the illusion of stability, the British government had to spend billions buying pounds whenever investors tried to sell them. But Soros believed this strategy could not last forever. Because in global finance, markets eventually overpower governments. So Soros began building one of the biggest trades in financial history. Instead of buying pounds, he began short-selling them. Short-selling means borrowing a currency, selling it immediately, and planning to buy it back later at a lower price. If the price falls, the trader makes the difference as profit. Soros didn't just bet small. By September 1992, his fund had built a position worth $10 billion against the British pound. It was an enormous risk. But Soros believed the government wouldn't be able to defend the currency forever. Soon, the entire world would find out if he was right. The showdown arrived on September 16, 1992. That morning, massive selling pressure hit the British pound. Investors around the world began dumping the currency. The British government reacted immediately. The Bank of England started buying pounds in huge quantities. Billions of dollars were used in an attempt to push the currency back up. At the same time, the government raised interest rates. Higher interest rates normally attract investors and strengthen a currency. First, interest rates were raised to 12%. But the markets kept selling. Then the government made an even more dramatic move. They announced interest rates would rise to 15%. It was a desperate attempt to restore confidence. But by that point, the financial markets had already made their decision. Traders across the world saw an opportunity and joined the selling. Billions of pounds were dumped in just a few hours. The pressure on the currency became overwhelming. And slowly, the British government realized something terrifying. They were losing the battle. By the end of the day, the situation had become impossible to control. The British government finally made a historic announcement. The United Kingdom would withdraw from the European Exchange Rate Mechanism. This meant the government would stop trying to defend the pound. Immediately, the currency collapsed. The value of the pound dropped sharply against other currencies. For investors who had bet against it, the profits were enormous. And no one made more money than George Soros. His hedge fund reportedly made over $1 billion in profit in a single day. Meanwhile, the British government had spent billions trying to defend the currency. The event quickly became known as Black Wednesday. And Soros gained a nickname that would follow him forever: the man who broke the Bank of England. But what makes this story even more fascinating is that it didn't just change one currency. It changed how governments think about markets. After Black Wednesday, central banks became far more cautious about fixing exchange rates artificially. Because they learned something the hard way. You can fight the market for a while, but you can't fight it forever. What's even more surprising is what happened next. In the years after the crisis, the British economy actually began to recover. Exports became more competitive. growth returned, and some economists later argued that leaving the system may have helped Britain in the long run. Which raises an uncomfortable question. Was the collapse really a failure? Or was it a necessary correction? Because in financial markets, pain in the short term often reveals truth in the long term. And that's what makes stories like this so powerful. They show us that behind every billion-dollar trade, there's not just money at stake. There are entire economies, governments, and millions of people affected by decisions made in a single day. And even today, the same forces are still at play. Currencies, interest rates, market confidence, nothing has really changed, which means the next Black Wednesday may not be a matter of if, but when. But here's the real question. Was George Soros a financial genius? Or simply a man who saw what others refused to see? Because the truth is, Black Wednesday was not the last time a single trade shook the global economy. And it certainly won't be the last. So what do you think? Could something like this happen again today? And if it did, would you see it coming?